Good. Well, today is Friday, April 12, 2023. Update for Monday the 14th. All right, let's go. Well, as far as new setups, I do like this UNM. The issue we're up against now, and nearly every stock in the certainly the tradable universe is set up. I went through last time I looked, it was like 2,500 stocks. It might have been more. But anyway, I'm trying to find stocks that are at high levels, just beginning to break down, and insurance fits that bill. A lot of stocks that are part of that 2,500 or whatever it was, they're at longer term lows and beginning to pull back. They've already made a big leg down or two. Anyway, so this one I think does have potential. We'll take a look at it in just 1 second. Go ahead and bump your stop on AGI. I did shoot up to about 30, but we're looking for 31.25. It gets fairly close because it did get there fairly quickly, or if it gets there, let's say on Monday, it's okay to take profits a little bit earlier on that one. Well, I guess we'll wait and see, and we'll know more on Monday. Let's take a look at the Landry list. Here's a UNM. It's a bow tie. It's also an explosion gap pivot where you have a gap down, and then you test that gap. So that looks like a stock that's in a lot of trouble. No visible support for a long time, maybe down here around 50 or so. Anyway, let's take a look at the portfolio, and then we'll pop out to the overall market. But out of all the stocks, there are only a few that are at high levels that look like they could break down. For now, let's just go with the UNM. Here's the AGI off its best levels. We're still up $1.25, nonetheless. Much better than the poking on. I keep an eye out for that IPT again on Monday. CVL kind of flatsville. So far, just pulled back a little bit. And so far, looks like it's still in trouble longer term. TPR down a little. This is a stock that's certainly you wouldn't want to rush out and buy at this juncture. It looks like it's still in lots and lots of trouble. 200-day moving average could be the first or the next stop there. Let's take a look at the sectors and the overall market. And right now we're to a point the market has cracked so hard where most sectors look like the overall market. So I'll try not to bore you too much with that, but I do want to just kind of point out the reoccurring patterns. Anyway, the P's, a little bit of a soft start, but did manage to close in the plus column. A decent day up, nearly 2%. It's funny, you squint your eyes, it looks like just a little narrow range bar, but that's a pretty serious day. Death cross could happen soon. There's a column in my newsletter, and it should be on the front page of my website, the home page, about the death cross. It's not the signal in and of itself, it's what possibly can happen after the magnitude of the signal. In other words, you get the short signal like we have in the NASDAQ, and then you wait for the long signal. If you look at that and try to test that out, it really doesn't test out that well, maybe 4% or so. However, the magnitude of the move below can often be significant. P's still look like they're in lots and lots of trouble. I know everybody got excited about the rally a couple days ago, but that's not enough for me to get excited. And as I've said quite a bit, when the market sells off hard, if it comes right back, people don't have time to think about selling. And a lot of people are in wait-and-see mode, and they hope, right? They hope it comes right back because the market always goes up longer term, right? Well, not really. But anyway, so if we begin to break down in earnest, I think we could be in trouble. But let's just take things, here it comes, one day at a time. There's your death cross in the NASDAQ a couple of days ago. Again, it's not a signal in and of itself, but it's the magnitude of what could happen afterwards. This one would have worked on a mechanical basis, but a lot of times it'll go down sharply and then come back fairly soon, and the moving averages don't catch up. So don't use that as a system in and of itself, but it does help to let you know the situation of the market. Rusty 2000, well, the death cross there happened a long time ago, so the slide from it has been fairly significant. So we're looking at the magnitude of the slide, and that's about 18% since that death cross, and that's what I would consider plenty enough to consider a decent move to the downside based on the magnitude. Anyway, Rusty up a little bit, certainly nothing to write home about there. EFA shares, nice little bounce there. I wouldn't call them out of the woods just yet, though, unless they maybe make new highs. For now, though, or maybe up here in the 80s or so, for now, they look like they still could be in trouble, so I wouldn't get too excited about that. As I would say, most areas look like the market itself, banging out some new lows recently and just kind of pulling back. There's broker, dealer, software. This goes on and on. And again, I'm not going to spend too much time going through these because they all pretty much look the same. Let's take a look at bonds. Bonds probed some new lows. That's a little scary, but they did bounce a little. I sure would like to see bonds get off their butt, especially given the nature of the market. I'd like to see some more flight to safety happening here. Speaking of flight to safety, though, gold, bam, winning. Look at that. Busted out the new highs with a little bit vigor, and gold stocks following suit. So the next pullback, we could get a chance to reload on a few golds. Just one more sector I want to point out here. Insurance is in the early phases of rolling over, and that's why we had that UNM tonight. Again, that's about the only sector that's in that potential second big leg down, as opposed to a continuation move from a longer-term downtrend like most of those sectors I just showed. Anyway, I think that's pretty much it for the weekend. I will be checking in on Facebook, and feel free to hit me up there or shoot me an email if you need a little help. Everybody have a fantastic weekend, and we'll talk again on Monday, if not sooner. Thank you so much.